Hey everybody, how you doing? It's Bruce here, Uncle Bruce with Stock Markets with Bruce. Welcome one and all to the show this morning. It is
It's Bruce here,
June
Uncle Bruce
the
with Stock Markets
16th, 2021, and it's a Wednesday and it's hump day, and I'm glad you could make it. Jennifer and I yesterday evening had our shots, our second shots, so I have a sore arm today, and so this wing will be resting. But other than feeling a little tired, so far, so good. Can anyone help me checking my SPAC dates? VGAC trading as 23andMe tomorrow. That is right. That's correct. FAII had their shareholder meeting yesterday. We believe so. Everything we can dig up from secondary sources, because Lord knows we can't find a press release from these guys. But 8 a.m. yesterday morning was the shareholder vote, from what we understand. And we're led to believe it went through, but I can't show you and I can't send you a press release from any source at this moment. The stock is up 11 cents this morning to 9.85. Yesterday, we had a lot of fun on FAII, for Fortress Value Acquisition Corp. The shares went down to 901 mid-morning yesterday for no reason. We had no idea why. It must have been right after the meeting was over, I suppose. It must have been after the meeting. Again, I'm throwing my hands in the air going, I wish I could tell you. But 901, I know a lot of you who were watching me and watching this fall immediately jumped in there with buy orders to try to get some. You saw it dropping like the 950s and the 940s and the 930s. So you started putting in buy orders at 901, 10, 20, 30s. And a bunch of you picked off some stock yesterday. And I say kudos. And a lot of you were looking for call options that you were trying to scoop up. And a number of you were successful in getting cheap call options. So after the stock cratered at 901, it reversed course and closed last night at 974. So that's 73-cent bounce back. Still losing 21 cents on the day, but at this moment in the pre-market, it's at 985 and it's up 11 cents from yesterday's close. So there you go. Fortress should start trading as ATI Physical Therapy Centers, ATI. That should be next week. So we're going to have to wait for that one. And we will. And let's see how things go. Tomorrow, 23andMe starts to trade as ME. That's VGAC. Goodbye, VGAC. Hello, ME. And then we'll say goodbye to FAII and hello to ATI, I guess. I think that's the symbol, ATI. I don't even know. Again, there is no announcement from this company. These guys are terrible at PR. I'm hoping that there's staff at ATI to take over the investor relations functions, because from Fortress Value side of things, it's just pathetic. There's nothing. I looked into the SEC filings this morning. I can't find a darn thing there. I'm wondering why not. I am puzzled. I'm a very puzzled man on this one. But the shares are improving. So, okay, we'll give it that. We'll take that for now. Over on VGAC, speaking of 23andMe and VGAC, the shares are up 23 cents this morning in the pre-market at 10.89. They hit a low of 10.39 yesterday. That now is a 50-cent recovery from where they were. Having lost, after it was all said and done, they lost 82 cents yesterday. Getting back 23 now, we're still down 59 cents from where we were a day and a half ago. So this stock has a bit to go to give us back kind of the real estate it lost. Again, I'm assuming that the 23andMe promotion machine will kick into gear starting tomorrow and the day after and the day after and the day after. So at the moment, it's the last hours of VGAC trading today. And then tomorrow it is 23andMe. So let's watch for that and cross your fingers. And I'm expecting quite a bit of exposure for this company going forward, with regard to the fact that heavy hitters are coming into this thing, and they are not here for a $10.89 stock price. That's not what they're They're not building 23andMe with this price objective in mind whatsoever. So you're into the ground floor, kids. This might be your last day to scoop up VGAC. It might be your last day or so, 2 or 3 days for FAII, cheap prices before they're on their way to wherever they're going. I've been reading a lot about the significance of this Fed meeting taking place. How do you think the outcome will affect the market taper tantrum? Yeah, it's a lot. It's all to do about nothing. There's nothing coming out of this Fed meeting that is going to stop this market from going higher. There's nothing from this Fed meeting that's going to stop the economy from getting stronger. No matter what they do or say. And they're not going to do or say anything, really. They don't want to even talk about it. They just want to lay low and just, keep assisting the credit markets. Lots of available credit, low rates. They're competing against the European Central Bank, which has negative rates. There's no way we're going any higher on rates here. You've noticed the 10-year note in the last month and a half now have gone from 1.7 to 1.45 or so. The rates in the U.S. could have gone negative had the United States Treasury wanted to do that. Hasn't happened, may not be necessary, but they're certainly not going to go higher. There is so much cash in the system looking for a place to go to bring in a yield. It can't find it. Like all the cash out there can't find a home. It's that ridiculous. Car companies would love to lend you money to buy brand new Ford F-150 trucks. The problem Ford has, they can't get the F-150s to the dealers to lend you the money to buy an F-150 because they've got computer chip problems. They have shortages. And there are thousands, maybe 10, 20,000 Ford F-150s stuck in limbo. They're slowly coming out. I mean, there are chips coming in, but not enough to satisfy the demand. So Ford F-150s, every truck that lands on a dealership lot is basically pre-sold. But car dealers, every one of them across the United States, I would bet you, if you ask them, are saying, "Oh, I could use." We could use a ton of these things. We got customers coming in here every day wondering when can they buy a truck. This money is ready to be lent, to be borrowed. This money can be borrowed by people at 0, 1% for 5 years, 8 years. I mean, we're talking cheap money, almost free money. Certainly compared to inflation, it is free money. Billions, trillions. There's a couple trillion lying around. American savings rates are at all-time highs. The average American savings rate is up 26%. The amount of money, the amount of cash sitting in American savings accounts is at least $2 trillion. Where 5 years ago, Americans were in big trouble economically because they were just coming out of 08, 09, 10. And 5 years ago, it was 2017, and it was still only 7, 8 years after the big crash. We're still recovering. But savings rates now are at record highs. Credit card debts have plummeted with credit card companies. Because a lot of Americans have figured out that, hey, when my mortgage comes up for renewal, I can waltz into my Wells Fargo or Bank of America, wherever I get my mortgage from, or I shop around with a mortgage broker, and I can get a mortgage on my house for 3%. And they're offering me an extra 30, 40, 50 grand more on the equity of my home, because my home equity is going up. And there are Americans out there who are carrying $10,000 and $20,000 credit card debts at 20% interest, who go to their banker and say, I would like to get a $30,000 addition to my first mortgage, and I just want that money to go over to my credit cards. And the banker's going, yeah, sure, I'll be happy to do that. Not a problem. We'll pay that off for you right here. And you just had your cost of living go down by $600 a month just on interest charges. You're being nailed 2% a month on this money, practically, and that's $600 a month. You're not paying that anymore. You're replacing it now with a quarter of a percentage point a month because it's a 3% mortgage per year. So now you're going to pay $900 a year in interest on your $30,000. That's $75 a month from $600 a month interest charges. Plus, don't forget the credit card debit balance. You have to pay a certain percentage of the amount. I think it's 2%. That's another $600. Whereas on a mortgage, you have 25 years to pay it off. And so a $30,000 loan over 25 years is $1,100 a year, something like that. It's $80 a month. So instead of paying $1,200 a month to the credit card company, you're paying $150 to the banker. That's after tax money we're talking about. That's a lot of cash differential. All of a sudden, these folks are going, okay, I've increased my mortgage by 30 grand. I got rid of my credit card debt. I'm going to get me a new car. And they go to their local dealer and they try to find the vehicle they want. And if they find it, they get 0% financing on their car for 6, 7, 8 years. And the payments are $350 a month. Again, $350 a month plus $150 a month on the new mortgage is $500 a month versus $1,200 a month on the credit card debt. Still $700 ahead per month after tax. That's a lot of money. That's a huge, and that's an upgrade in lifestyle, isn't it? Pressure is off financially. New car, mortgage is set up at a nice cheap rate. Yeah, credit rating going higher, looking good. And then there are those of you out there who are looking at me going, geez, this guy keeps talking about how I could become self-reliant and also I could go out on my own. But what I'm listening to, what Bruce is telling us, is I could borrow $100,000 on my house like that. I mean, my home has gone up $200,000-300,000 value in the last 2 years alone. Our mortgage is way down here at we only own $150,000 on a $600,000 house. I could borrow $200,000-300,000 and just buy IBM with this stuff, and I can get 4.5% on my money from IBM, just the dividends, and that company's growing. Those shares will double in the next couple of years. Why don't I borrow 300 grand, buy IBM, bring in 13,500 a year in dividend money, utilize that money to pay for the money I'm borrowing, because a $300,000 mortgage at 3% interest will run you about $1,300 a month. So you're talking about $16,000 a year in total payments on a mortgage. And you're bringing in $13,500 just on the dividends. So you need like $150, $200 out of your pocket to fund the $300,000 loan. And of course, every month that goes by, the mortgage drops by $1,000 a month in what you owe them. Your IOU drops $1,000 a month. IBM will have dividend increases in the next year and 2 and 3. So the dividend's going to go higher. The mortgage payment stays the same. Within a year or two, the dividend will be higher than your mortgage payments. Now you don't have to use any of your cash to carry the $300,000 additional. And if the shares double every 2 to 3 years, 2 years from now, they double up. You've got 600 grand worth of stock and you only originally you owed 300 on it. But after 2 years of payments, you've paid 24,000 off. You only owe 275 on a $600,000 stock. Hello? If you write call contracts against the IBM, even if you're writing call contracts, $20 ahead of the stock, good for a month or two at a time, you might bring in another half a point a month in premium on the value of your stock. Well, that's $1,500 to start with. That's more than your payment that you need in the first place. So it's a free ride. That's what it is, and it's a ride that's getting richer and richer and more valuable. So within 10 years, you could be in a scenario where the stock has doubled and doubled again. You now have 1.2 million in stock. You're hauling in $50,000 a year in dividends. And you owe in 10 years, $100,000 less on that mortgage. You only owe $200,000 on it, and you got 1.2 million in stock. Hello, that's $1 million gain in 10 years on your portfolio. Ever thought of that? That is doable, and this is just basic stock trading. This is what I would be doing with you as your broker. I mean, I'd be calling up going, hey, why aren't we doing this? What Is there a reason why you don't want to do this? We could do this on Apple. We could do this on Microsoft. We could do it on Apple, Microsoft, and IBM. We'll do like a third. You know what? Put it all in one basket. We could do this with all three stocks, and we could write options on all three of them and bring in the dividends they're bringing in. The IBM has the best dividend, but the other two, they're raising their dividend. Why don't we do that? That's what I would be doing as your stockbroker, just to get you going. If I own 100 shares of stock and I write a call option against them, do I only make money on the contract, or does my 100 shares still go up and down outside of the contract? Yeah, so if you have 100 shares of VGAC and you write a $15 call contract and get $1 for it, it's all theoretical. You get the dollar. If the calls die worthless because the stock didn't go over 15, you keep the buck. If the stock goes to 1450 though, but doesn't go over 15, you're from 1080 to 1450 richer. Yeah, so you got your stock. It's gone up in value. The contract's died, and that's $1 on top of the gain. And keep writing. You bet. I'm wondering why stocks often react negatively to bought deal offering announcements. Sure, the deal could have been at a lower price per share, but if it means dollars for growth, isn't that good? I think it's good. I think a company that raises cash, generally speaking, that's a good thing. Unless there's a company, trying to raise cash, but they're deep in the hole. Sometimes that's not as good as, but it's still a good thing. I mean, raising money when you need money is a good thing to do. Companies are very careful to raise money with stock because they don't want to be pegged as, companies that are diluting their shareholders. They want to be pegged as companies that are raising cash in a strong market to strengthen the balance sheet. That, I think, is a good thing. In purchasing calls, I have the ability to set the bid-ask price. If the current ask is $5 and I set mine for $1.50, is it correct that I will sit until the actual price drops to $1.50? Well, if the market is, say, $1 to $5, and you want to buy, you go 105 bid, $1.05 bid, and you're the highest buyer. As long as there's nobody ahead of you, you're the first guy to get any if someone comes in at market. If you're trying to sell and it's 1 to 5, you put it in at $4.95 and be the lowest price seller, but don't be a seller below that, because if there's no one cheaper than that, then you be the cheapest seller. And then wait for the market to tighten up. You might see bids come in at 150 and sells come in at 450, and it'll go to 2 to 350, and you'll begin to see, and you just kind of get in front of the buyer ahead of the seller and just kind of move in there and just kind of see where it goes. That's how you do it. Is it normal for options to be so high on the first day of offer? No, it's not. Can you explain what makes them go so high, though it's the first day? What makes them come down? It was just such pent up people wanting to get in. They were just outbidding each other, and they paid too much on the opening. And it'll settle down. It'll calm down here, and maybe there'll be some better prices. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.